Started, guys. First of all, we appreciate every single one of you joining us today. I know it's a weekday. I know it's the evening time. I know you guys are all tired, but we appreciate you coming in, and we'll definitely make it worthwhile for you guys. In this land investment masterclass, there's going to be a lot of strategies and tips that we're going to be sharing with you guys. But also, the most important thing is our core five pillars that have been pivotal in our business model and then the success that we have seen. It is because of this blueprint that we have used over and over in multiple different projects. And essentially, uh, I encourage you guys to stay till the end because we have a surprise and a gift for every single one of you. So I hope all you guys stay till the end, and we're going to be sharing that gift with every single one of you where you guys are going to find a lot of value in. And so, yeah, let's get started.
All right, beautiful. So, guys, yeah, a little bit about myself. For those of you who don't know me, my name is Hisham Kufeshi, and I started off my real estate journey. First of all, investing in commercial properties, plazas, and other commercial properties, things of that nature. But about 14 years ago, I got into land development, and it started off with a single unit in Mississauga, a house. Bought the land and took it through the approval process and construction, and through that journey, learned essentially the basic ropes. I'm going to say, with respect to land development at that time, and that cascaded into purchasing a smaller parcel as well. Did about 20 units, but at that stage, it was strictly focused on getting just the approval portion, not following through construction. Flipped that, bought a larger piece, also developed it, so on and so forth, and it went from essentially subdivisions consisting of single family homes and townhouses and things of that nature into what you see at the bottom of the screen, which are on the left hand side, mid-rise buildings. And we're actually doing right now a project as we speak. That's a high-rise project, but for the most part, the vast majority of our experience and what we like to do is in the low-rise space, what we call sprawl style developments. So to date, we've completed roughly around 900 units, um, consisting roughly of about $380 million worth of retail value. Junaid, a little bit about yourself. You're muted. You're muted.
Yeah, absolutely. I met Hisham 5 years ago, and before that, I was in the same investment space like many of you guys. I had no exposure to the land development or land entitlement space, but honestly, it was something that I always wanted to get into. But even back then, there wasn't much knowledge, and a lot of information was gate kept, and nothing was really public about how do you get about starting implementing this strategy in your real estate field. So, I started my real estate journey 8 years ago, starting with wholesaling. Then I dabbled into doing smaller multifamily. So I ended up acquiring portfolios of fourplexes all across Ontario. And then from there, as the market shifted, I shifted my focus into larger multifamilies. Again, just acquiring it all over Ontario. There was a few different models that used to work. I know with all the new CMHC stuff. But yeah, 5 years ago I met Hisham, and honestly, this was development was something I really wanted to get into, and so had no prior knowledge or experience or exposure into that space. I came under Hisham's wing and just went with the flow, and 5 years later, now we have a development company together, and we have done multiple different projects, including a high rise and on land banking all across Ontario as well. And so, for many of you guys, I know it can be a little bit challenging. It can be a little bit difficult because there's so much happening. But once you understand the right framework, it is quite straightforward, which we're going to be sharing with you guys in the next coming slides. So again, there's a lot of common myths about land investing and land development. A lot of people assume that you need to be able to build houses or build condos to make money, which is not true. There are other ways to generate profits without taking it through the construction. And the other thing is you don't need millions of dollars to get started. Like we have done projects creatively where we did not have to come out of with a lot of capital out of our pocket from the get-go. And the other biggest thing that we hear is like, development is only for wealthy developers, big corporations, but that's not true. There's a lot of small time developers who are also successful, but also have lost their shirt because again, it's a strategy that you need to know what you're doing. If you get into it without the right framework, it is very difficult to be successful because there's a lot of mistakes you can make. And again, other stuff that I hear is land investing can take years and is very, very complicated. It does take long and it can be complicated, but if you understand again the framework, it is not that complicated because you have, as long as you have the right team around you, essentially you can see a lot of success in that space. So the other thing that I see as well is like you need to be a contractor or engineer to understand it. That's not correct. And so many of you might argue that, hey, listen, Junaid, you already came from an investment background. So for you to learn about development was much easier compared to somebody who has no prior investment knowledge, which is true. I was ahead of a lot of people, but at the same time, even if I did not have that, I would still be able to get to where I'm at with the right framework. So essentially, you can start, building profit from development by just doing the entitlement work. And when I say entitlement work, it's a process of getting your approvals, which Hisham is going to share with you in the next coming slides. And there are deals which we have structured as creatively to put down the least amount of money out of our pocket, including in this case, $50,000, and essentially structuring in a way where you have more flexibility, right? And so, if you can acquire and acquire the land at the right price and the right parcel, you can see the multiples, right? It's a strategy where you can make 3x, 5x, or even 10x, depending on the strategy that you're implementing and the type of site that you're acquiring. And it is true that you have to understand how the policies work in different cities, and you have to be really good at spotting hidden land development opportunities. It's again the lens, right? Like I hear many of you guys are here that are flippers that are in multifamily. Over time, you guys build that lens that you guys look at all these deals from, and this is a good deal, this is not a good deal. And so, once you get exposed to this side of things, you will understand that. And again, I'm a true believer that the real money is actually built in controlling paper with reduced risk. Essentially, you don't have to do development and take it through all construction. You can exit early, take on less risk, and still be profitable. And so, this is how a lot of pros do it in this space. So in this training, we will show you exactly how to get started. And again, this is, who is this for, right? I mean, it can be for somebody who's just starting out, is a beginner, or even somebody who's experienced, right? I mean, development can be, you can do a small scale development or you can do a large scale development, right? It's again, you can buy a smaller multifamily, you can buy a larger multifamily. You don't have to get into the larger projects, right? And essentially, you can be a flipper, you can be a wholesaler, you can be a buy and hold investor. It's again, once you understand the framework and the process you take each of these development sites to, is just a knowledge gap there.
Right. And so to get into really what entitlement truly entails, when you hear the word entitlement, for the vast majority of you probably never heard this term. It's a very industry specific term, but really what it refers to in essence is the true form of what land development is. So when you hear about land development in the news or in the media, typically you conflate it with the construction of a project, building, whatever it is. But the true definition of development has nothing to do with construction. Construction is construction. Development is the process of actually taking a property that has served a single purpose and converting it to another purpose of your use that you determine or decide. And so typically all it really takes is changing the use through either a rezoning process, or it could be as simple as doing a minor variance or a severance or a full blown out plan of subdivision, getting site approval, and master plan communities if you really want to get into the complicated portion of it. And so again, in essence, entitlement only focuses on obtaining approvals and nothing else. It's essentially turning a useless piece of land, or a piece of land that's not useful for your particular use case, and obtaining the approvals in order to be able to legally use it as such. Junaid, you're muted.
So again, we're gonna break this down into five pillars to have a successful land entitlement project, right? And so, again, in this presentation, we cannot go to core of each of these, but what we can do is give you a core understanding of what does the whole entitlement process actually entails, and what processes that you have to go through to be successful in this strategy, right? It goes without saying, finding the right parcel of land. Again, whether you're doing flipping, multifamily, you actually make your money on the buy. And so, the due diligence process that you take your multifamily through, there's a different process that you take land through to make sure that it is the right parcel of land that you can essentially develop on. And so when you find that parcel, you take it through the due diligence process, which is a second pillar. Then with third pillar, you got to make sure that you can finance the land creatively. Now, with land, you have a lot more creative options, right? Because land, it's very difficult to find financing on. So you can get very, very creative with the sellers. And the sellers have, compared to residential sellers, people that are selling land, they understand and they know that there are creative ways for you to buy the land, right? And so once you have acquired the land, then you can take it through the approval process to get approved, which is the longest cycle of development, where you're going to take it through the approvals, which Isham will discuss about. And then once you have all your approvals, then you can exit the land with profits. And then that's your full cycle of a successful land entitlement.
All right, so getting into the details of our first pillar, are the very first step, which is, where you can get excited. So the old adage goes, location, location, location is true specifically with land development. You want to make sure that, the land is located in a place that is suitable for your vision, the use that you're looking for. And the thing is with development is that there are multiple different kinds of development in the industry. What we refer to as greenfield developments, which is what we are going to be focusing on. It's typically raw land just outside of a municipality, whether it's a city or a town. Or you could do what's called an infill development, which is purchasing, an existing lot or an existing property within the city or municipal limits, and taking it and changing its use from a single use to a use of your choice. And that can also entail things along the lines of brownfields, which are typically brownfields are referred to sites that are contaminated in nature. So either they're an old factory where there was some form of manufacturing done. It could be a gas station where potentially there's oil spills that contaminate the soil, or mechanic shop, or any use that may potentially contaminate the use of the land. And so what we're going to be focusing on, as I said, is the greenfield portion, because that is typically what we like to do and what we focus on. And so after you found the right parcel, the next stage in this, as Jade mentioned, is conducting your due diligence. And this is quite possibly the single most important step that you can take with respect to land development, because you have to make sure that what your intended use, whatever your vision is indeed possible. And so what that means is, does it meet the official plan of the city? Why or why not, right? Is the zoning conducive of it? Is it within city limits that allow you to do the type of developments you're looking to do? Do you have road access? You need to do a title search, make sure that there aren't any easements, liens, or any other encumbrances that may keep you from being able to develop it, or make it a difficult process, as a matter of fact. Do you have services? And so with respect to development in general, when we say services means municipal services, as in do you have water lines close by? Are there capacity in those lines? Do you have sewer lines close by? Again, are there capacity in them? Can you get electrical lines close by? Is there, again, capacity? Are there gas lines? Is there internet? So a number of different things. And so once you're satisfied with that particular step, you move on to the next step. And as we did mentioned, pillar three.
Isham, Isham,
Yes,
one thing before we move forward, there's a question. So, I don't know if I'm pronouncing your name right. Abhishek, you asked, how do you get the information about that? Speak to the city, any other ways? Abhishek, which information in certain? Are you talking about the capacity, the zoning information?
The zoning information, what it could actually be used for.
yeah. And for to check zoning information, every municipality typically has what's called a zoning map. And how you access that is you actually go to the municipality's website and you go to the development and planning department, and typically it's listed underneath there. Some municipalities have the old PDF paper style, but most of them at this stage have an interactive map where you can enter a specific address and see exactly what the existing zoning is, and on that basis, you can also see what the surrounding parcels zoning is, and if you have a particular vision for converting the use of this target parcel into one that's similar to the surrounding ones, and you may have a case to go ahead and make with the municipality to get the zoning changed. Does that answer the question?
It does. And then, do you guys end up speaking with the city at all to clarify and make sure that you're, I guess, a way to de-risk yourself?
Absolutely, yeah. We're covering that now in the next slide.
Okay, perfect.
Okay, we'll talk about essentially what the first step is in obtaining your approvals, which is exactly that, talking to the city through a process called a pre-consultation. But we'll get into that.
A question.
All right. Sorry.
Are we getting into the financing of things now or no? Later.
Sorry.
The creative financing.
Yes. I'm going to cover it right now.
Okay.
Yeah.
Yeah. So look, with financing land, as Jade mentioned, you can't just buy a piece of land and then walk into the bank and say, "Hey, I want a mortgage on it." Typically, that's never going to happen. There are specialized lenders that can give you, say 50% loan to value, but that comes at a later stage. And so, typically, how do we go about structuring creative financing? And so, there are things that you can do. One of them is what we call a VTB, or a vendor take back mortgage, and all it simply means is the seller will hold a mortgage in place for you. So, for instance, if you're buying a land for $1 million, as an example, and you negotiate with the seller, yes, I want a 50% VTB, then they'll hold a $500,000 mortgage, and you have to give them $500,000 upon closing. And that could be for a number of years. It could be interest free or with interest, 2 years, 3 years, 5 years, whatever you can manage. The other thing you can do with sellers is you can put together what we call option agreements. And essentially what they are is it's an agreement to essentially have an option to purchase the property at a later date. And typically it comes with, some premiums that you have to provide in order for it to be worthwhile for them. Or you could do joint ventures. You can partner up with other people with capital, and you bring in the knowledge and the sweat equity to oversee the project. You could raise capital from investors as well through GPLP structures. There are many interesting ways where you can be creative in this process. And so the real technical side of the 5 steps that we're presenting here today is navigating the approval process. And so depending on what sort of approvals you get, what level of development you're doing, it could be something as simple as getting a minor variance, which is what a minor variance is basically looking at an existing zoning of a property, and perhaps you're looking to get a relief on one of the restrictions of the zoning bylaw, and so therefore you go and apply for something called the minor variance, which says, okay, as an example, if your front yard setback, for instance, is supposed to be 10 feet, but you can only give about 8 feet, then you go and apply for a minor variance and see if they'll approve it that way, right? A very, very basic form of development, but I guess technically it can be labeled as such. Or you could go and do a severance, and that's basically if you have a parcel, let's say it's 50 by 100 feet, you can go and apply for a severance to split it into two, to have two 25-foot lots that you can build on each individually, right? You'll have two different pins, two different titles. Or you can go big, go through a site plan approval process, go through a draft plan approval process. And essentially what that is you're going through a full-fledged development that basically is taking it from a raw stage all the way up to full approval to get an entire site approved. So as an example, if you have a 10-acre parcel that has a single pin, and you can go in and get it approved for, let's say, 100 townhouses with 100 different pins. And so part of this process is assembling your team of professionals who are going to be acting as your consultants on the project, which can include planners, architects, engineers, other professional consultants as well, depending on the types of studies that you are required to do. And so to address your question, Abhishek, basically the very first step that we do after we're satisfied with our personal due diligence is we do contact the municipality and we apply for something called a pre-consultation. And so what that entails is basically you go and you submit some paperwork to say, look, municipality, I'm looking to do this with this property. Okay, I want to build a subdivision here. You submit your plan of your draft of the subdivision, and then they will comment back telling you, look, we're either in support or we're not in support. And if they are in support, these are the list of studies and drawings and plans and everything that you need to submit in order to get your approval. And so you take that list, you go out, you reach out to your planner, your architect, your engineer, your whoever, complete that, compile it together, and that at that stage you have a completed application which you can submit to the municipality, and that is essentially your final step before getting full approval, barring any revisions that they require. That makes sense? And finally, sorry,
I know, Janae, you said to write the questions down, but I just have a follow-up question on that.
Yeah.
So do you end up doing that process, the pre-consultation, after the offer has been accepted and you own the land, or is that in the due diligence stage when you are just kind of looking at things?
During due diligence, typically, yeah, because you don't want to go firm on a parcel and then you find out that what you're looking to do isn't possible here, or it's a major uphill battle.
Got it. Perfect. Thanks.
Yeah.
Sure.
Yeah, just to kind of add on to that as well, there's a process of different things that we look at before we're acquiring. First thing is, city support, what we're looking to do, is that even possible? But even before all of that, is the land even developable, right? And that's where people make a lot of the mistakes, is they think all this land is developable. But when you really look at how much of that land which is available for development, you will realize it's very, very small. And you can easily find that from a Greenbelt map. But again, I'm not going to go into any of that.
Well, Greenbelt map is one of them, but we've got 37 conservation authorities in Ontario alone, and each one has got their own little quirks that you have to check. But that's a little bit too technical for this presentation. So this brings us to our final pillar, which is the part everybody loves, right? Exiting with profit. And so with respect to the type of developments that we focus on, being greenfield again, there are many different exit options. The first being, of course, and the simplest, is to sell the entire site to a builder who will come in, pay you, and you're done. Great, congratulations. Or you could, for instance, because you have now an approved site with a whole bunch of different lots, you could sell individual lots to end users, or sell groupings of lots, so 10, 20, 30 lots at a time, to smaller builders who will proceed with the construction. Or you could JV with a builder for a delayed exit, which will bring in more profit for you. You can also refinance it if you are looking to do, for instance, rental purpose, right? You can, as in a commercial plaza or residential apartment or whatever it is, you could complete the project, and upon leasing it up, you can refinance it with a financial institution. So there are so many different exit opportunities depending on the type of project that you're looking to undertake. And finally, Junaid.
Okay, so since everybody made it to the end, first of all, amazing. Thank you for staying till the end. I told you guys there's a special gift for people who are gonna stay with us. And so essentially what our vision with all of this is, again, what we want is more competent developers. I think there is a need. I think Canada needs housing, and I think that we can do much more damage with teaching people how to develop correctly. We've had so many conversations with so many amazing developers, and because they did not have the right guidance, they've bought the wrong parcel. They've bought a parcel which they can't do anything on, or they have a very small developable area that they can actually do something on. So what we ended up doing is we built a community for land investors and land developers. It's called Land Wealth Academy. And what we have on that there is we have a step-by-step course on, again, all these 5 pillars. What you got today was just the highlight of what it entails, right? There's a lot to know. There's a list of due diligence that you go through. There are a few different ways to find land. And so for us, it's very difficult for us to cover that in an online session. So what we ended up doing is we're creating a course which is kind of broken down, which helps us put everything that we have up here on screen where people can learn, and concisely in a way where people can get the most benefit out of. And then, once you join this community, you get a one-on-one strategy call with us. You get access to our high achiever community. Right now, I believe we have about 100 plus members. And what we're going to be doing is doing more bi-weekly calls, what we call power hour coaching calls, which we're going to be looking at other people's development. We'll be breaking down our development, doing case studies, doing live deal breakdown. And there's a really cool, thing that we added to all this is, again, whatever developments that we're currently working on, we're going to start doing site visits with our people that are in the community, giving them more exposures in the world of land development. And then again, you'll have live Q&A sessions with us, exclusive opportunities for JV partnership. And then again, for a lot of my guys who are not ready for land development or land entitlement, they just want to learn more about wholesaling, bar, multifamily. These are the courses that we have already created previously. So what we have is we just kind of have them as bonus. If you guys want to take a look at that, you guys can go on it, review that. You guys will be very surprised. There's a lot of time that has been gone into this to create this. Essentially, whatever we have in our head now is on here. So if you want to join this, and again, it's 100% free. We're not charging for anything. You join it. We want to, like I said, create a movement of competent developers. And so if you're interested in joining the community, all you can do is simply on the right side, the black QR code, you can use that code to join the community. It will take you to our school platform, and when you press join community, it will ask you for your name, email, and once you're in, essentially you'll get access to all of this. Also, if you're interested in learning more about what we're working on, all the amazing opportunities that we currently have on the go, and you're interested in joining our newsletter, you can also scan the QR code that's in green and sign up for our newsletter. And honestly, it's also a great way for you to get exposure on, okay, how are these guys doing their due diligence? How are they bringing the products to the market, right? And so it's a full cycle. And so listen, if this is something that you're interested in, maybe you don't think that you're ready to jump into it, but you do want to learn more, I think it's a great opportunity. Right now it is free, but we're most likely going to have it paid when we have like 300-400 members. But right now, like I said, this is the movement we're looking to create, and you guys are the founding members with the other ones that we have in here. I don't know, Hisham, anything else?
No, I guess you covered everything. And let's just jump into the Q&A. I know we've got a couple of people that need to get going. However, now's the time, guys.
There's a couple of questions I see. So Ali's asking, let's say everything goes well and you're able to build a property. Do you guys also take care of filling the units with tenants? Can you speak on this process as well?
Yeah, so typically with respect to rental property, as we said, we don't really get involved in rentals other than commercial style, so plazas and things of that nature. And yes, for the ones that we're looking to retain, we definitely get involved in the leasing process. But if you are essentially looking to develop a rental purpose, whether it's residential or commercial or industrial or whatever, um, you can either yes take on the lease up process, or you can hire a property management company to do so on your behalf.
Does that answer your question, Ali? Okay, so now we also have a question from Judith. Is there a better time in the economic cycle to do land entitlement? This is a very, very good question.
Yeah, I mean, so that yes, so it's with respect to land entitlement, guys. What we described to you here isn't. It's not something that you can complete in a day or a week or a month. Typically, land development takes years, and it can range realistically anywhere between 2 years all the way up to 10. Depending on the size of the project and the complexity of it, and then are all of the other components available to actually make this successful and viable at the moment, as in, like, as we mentioned earlier, with respect to services and what have you. And then again, you have what we call in economic cycles. And so, if you guys recall, back during COVID times, as soon as COVID hit, yeah, everybody was afraid that we're going to have a recession. The stock market started crashing, but all of a sudden, we saw this massive activity in the real estate market. Prices, valuations on properties were growing on a daily basis, and it got to a point where essentially it became unsustainable. And what we found was that as soon as interest rates started going up, property values started going down inversely, right? But this is very normal. It's not something that is out of the blue. It's not a one-time thing. If you look historically, the market is very much cyclical, and you have bottoms and tops, but typically it always heads up over the long term. And so with respect to development, yes, there is a good time to start a development, and there's a bad time to start a development. You don't want to get caught, for instance, if you were to start a development, as an example, back in 2023, and now it's 2025, you're finally getting your approvals in a market where nothing is moving and prices are adjusting downwards. The best time is to actually start a development today in a condition where things aren't looking so great, because you get favorable terms on buying the land, you get favorable pricing, and at the same time you have less competition. And so with respect to getting quotations from your consultants, getting quotations for, or rather getting in with the municipality, and having negotiating on cost sharing agreements and things of that nature, you have a lot less activity, and so you get the priority in that space. And the wonderful thing is, if you look historically again, typically recessions or bad economic environments only last between 18 to 24 months. And so the best time to start a development project is during a recession, because by the time you're exiting it, you're going to be on the other side of the recession into a booming economy, and you'll benefit significantly from that.
Fantastic. Okay, so Hisham, the next question from Mario. For someone who's getting started, how do you recommend that they should go about finding land development deals instead of leveraging realtors? So I guess I'll start us off with that question. First thing is, again, for you gotta build a web of network, right? And so what me and Hisham have done is Now, because we have a network with other developers, essentially any deals that do come in any of their pipeline, because you got to remember, a lot of these deals that get done are typically done off market. When the development opportunity hits the market, you already know that it's been through many different hands before it hit the market, right? And so what me and Isham do is like, how can we be the earliest people to look at that deal? And so essentially, I don't know, Isham, you want to add on to that as well? He's saying outside of leveraging realtors as well.
Yeah. So outside of leveraging realtors, really it comes down to what, to build upon what Janeet is saying. We've done is we've built a vast network of individuals who understand what we do. They understand the level that we play on, and so and they also know that we give them quick answers. And so what they do is they send us a lot of deal flow. So Janeet and myself. Today I could say on a monthly basis we look at about 100 different deals, of which maybe one or two maybe make sense. And so really it's I would say, if you are starting off, don't try to do something too big. But also it's really difficult to find something of value on the MLS, especially when you don't have a gauge to measure by. The one of the biggest mistakes that people make when they're getting into any sort of real estate investing is paying too much for the property. There is a saying in real estate investing, and that is, you make money on the buy, whatever the asset is, whatever the asset class is. And so if you're unable to do that because you can't gauge what the true market value is, then it would be a difficult thing to achieve. And so what I would say is, similar to how you assess single family homes, multifamily, commercial, whatever it is, you have comparables to go by, and that would be a good gauge for you to get started. If you don't have those resources, if you don't have those contacts, then you could simply grind it out. Get in your car, drive to an area of your liking, knock on doors, build relationships, and that's a good way to get started.
Fantastic. Thank you, Hisham. And then we also have a question from Danny as well. Congratulations, Danny. You've joined school. Amazing. We'll see you on it as well. And just to add on to what Hisham is saying as well, we have these different tactics that we use to find land. And so you can also find that also in school as a course. And so what Danny's asking is, first question, do you find your parcels on or off market? And how long is your due diligence process prior to making an offer? And roughly how many parcels that you do due diligence on and end up actually offering on? You guys will be very surprised with this answer. Hisham, how many parcels do we look at?
As I mentioned, we look at about 100 different deals. Typically, for the vast majority of them, they either don't make sense because they're in the middle of nowhere. They have conservation or a large swath of conservation. They have no services, no access. They're not within urban boundaries. They're not developable in any short period of time, and really, multitude of different factors. And so the second part of that question, how long do we spend doing due diligence? It really comes down to the particular parcel and how quickly we can get our answers. Some of the things we do to conduct due diligence consists of reaching out to the municipality and seeing what sort of feedback we get on that particular parcel, and that could be anywhere from a day to sometimes it takes 3 weeks for them to get back to me. So yeah, that's area dependent. Before, like, the type of due diligence we do takes roughly around a month, I would say, before we're ready to make an offer. And then post offer, it could be as much as 6 months. So the thing with the current market conditions is that because we have low competition, we've actually been able to lock up parcels and essentially put in 18-month due diligence periods. It allows us to structure a lot of the things that we're looking to do prior to having to firm up and close on the deal. And so there isn't one quick answer to that question. You have to look at how favorable the market is, where your property, where your target property is, what sort of due diligence you're looking to do ahead of time before papering an offer, and a multitude of different factors. But if you are interested in it, definitely join our academy and take the course. It's going to give you a strong foundational base to be able to act accordingly.
And then we also have a question from Era. Era, if you wanna turn your mic on. So what Era's saying, he has a site in Hamilton that is zoned for a mid-rise development. Is there a formula that you can use to determine what value would be once the site plan is approved?
Is there a formula you can use? Okay, so couple of things. With respect to development, especially when talking about Hamilton or any municipal boundary, what you're referring to is what we call an infill lot. And that's a lot that's within city limits. Maybe there's a couple of houses on it. Maybe it's a land assembly of 2 or 3 parcels. How much the property will be worth really comes down to how many units at the end of the day you're going to get approval on. And that's determined by the size of the land and how much density they'll allow you to do it. So when you get into the detailed side of due diligence and you jump into doing read-ups on zoning and density allowances and things of that nature, you'll find that within zoning bylaws, municipalities stipulate how much density they're willing to approve. And then, obviously that's not set in stone. You can go ahead and negotiate for more through your planning justification. But in essence, there is a market price on a per unit basis for the number of units you're going to have in your development. So if you take this parcel and you get approval for 100 units, it's not going to be worth as much as if you get 300 units, for example, right? I hope that answers the question.
Yeah, so I guess my question was, so would it be per unit that you're doing the calculation?
Typically per door, yeah. Per door or per what we call GFA, which is the gross floor area.
Okay.
But yeah, there are some things that you need to take into consideration when designing density projects, in that, how much usable space do you have, right? We've seen some projects out there that, we just shake our head at because, although, they go in there, they try to maximize the size of the building, but the building's not efficient. And what we mean by that is, okay, so when you have a building, as I'm sure you guys are aware, you walk into the building, you have the lobby, you have the elevators, you have the mechanical rooms and the garbage rooms and all of these spaces that we call common space. It's not really sellable or leasable space, but it exists. It must be built. Your ratio between your total GFA, your gross floor area, and your NSA, which is the net sellable area or net leasable area, is your efficiency rate. Typically, when you're designing these types of buildings, you want to be north of 80% efficient. There are some buildings that you'll find that are 70%, even as low as 65% efficient. And what that means is that you're wasting so much space and so much capital building out unrecoverable space, essentially. You can't recover any capital from that.
Right. Yeah, that makes sense. I joined the school too, so hopefully I can probably get more detailed info once we're in.
For sure.
Yeah, absolutely. And then we also have a question for Rabia. Is there any areas that I should avoid when it comes to development? Are there cities that I should avoid, I guess, per se, that when it comes to development, right? My personal answer is absolutely. There are a lot of cities that you have to go in an uphill battle with to get anything approved. And so for us, we kind of just stay out of that city. I mean, there are developers that are active there. Like, I'll give you an example. You got your Oakvilles, Burlington, Mississaugas, Torontos, in my opinion, that are very, very difficult. There's a lot of stringent. Like, I mean, I'll give you an example. We had a site up in Waterloo where our pre-con notes. I mean, Aisha, how many studies did they require on that site? How long was it? It was like 60 pages, no?
60 pages, yeah, 60 pages.
60 pages. And right now we have a site up in St. Mary's, and our pre-con notes is like I think what, like 10 pages?
12.
10 pages? 12 pages. Like, you see the difference, right? And it's again, and Waterloo's again still development friendly, but when you go into a city like Burlington, where you have that site, that story is so funny. I mean, it's
Yeah.
crazy how difficult they make development for you.
Yeah, it goes without saying. Some municipalities are pro-development, pro-growth, and others are completely anti. And it just comes down to, you know, at the end of the day, you have to understand that when it comes down to council, whether it's, the planning department, the approval council, the mayor, they're all voted in or appointed, and they have to answer to the voters. They have to answer to the constituents. And if the base isn't pro-development, they don't want to see growth. That's typically the attitude you're going to get from the leadership, because at the end of the day, their ultimate goal is to get reelected, nothing else, right? And if you're in a municipality that is pro-growth, then yeah, you're going to see that, because they realize that maybe they want to grow the population, they want to increase the tax base, and therefore grow that particular municipality. So you need to be very careful where you're going. But I mean, that's within what we call built up areas or already urban environments. In addition to that, what I would add is, if you're trying to develop in extremely rural areas, you're also going to have face massive challenges, because first of all, even if you're able to attain approvals, is there going to be demand for that particular development in that particular area? So these are just things that you need to keep in mind and be mindful of.
Absolutely. And I don't know, Eric, you have any follow-up to that? Okay, so the other question is from Denise. She's actually one of our partners on our developments. She's asking, the space required for parking and access is often underestimated. Absolutely. A lot of
Yes.
people don't realize that.
Yeah. So I mean, with respect to parking and other amenities and shared spaces, yeah, that could be a massive hindrance, and people do typically underestimate it. Now there's been more recently relief in urban environments, especially if you're within a certain set distance from a transportation node, as in like either a bus station or a subway station or LRT station or Go Station. They are, in many cases now, waiving parking requirements and things of that nature, which does make, the construction process much cheaper and the building significantly more efficient. But yeah, typically, these things can and do arise. Yeah, you're very welcome, Danny.
Thank you, guys. Any other questions, everybody? Just looking at it.
Sorry, I just thought of something. You guys mentioned the studies that are required for your application to the city, and it differs from municipality to municipality. Just based on your experience, given that Hamilton's more of a dense urban populated area, what do you think would be some of the requirements in a place like Hamilton?
It really depends on the type of development you're going to do. For instance, I could say, if you're, let's say you're in Hamilton, you buy up, I don't know, I'm going to say 4 houses side by side, right? With the intention of saying, you know what, now there's 4 dwellings here. I want to develop this into a high-rise 10-story building, right? And I'm going to turn that into from 4 to 200 units, right? They're going to say, okay, cool, that's fine. However, the street you're fronting on can only handle so much traffic, right? Now you're going from a situation where maybe you've got a car per unit or 2 cars per unit to 200 cars potentially per the same area, right? Is the road you're proposing to do this on capable of handling that much traffic? And so you need to do something called a traffic study to show support or lack thereof. For that particular development, there are, now in the place of doing 4 houses, you're putting up this massive building, which is significantly more weight. What are your soil conditions? You have to do something called the geotechnical study, which tells you what your soil conditions are, what it's made up of, how deep do you have to go in order for you to hit some solid strata. Where's your water table at? There are many different factors that come into play because those conditions are what dictate your engineering drawings, essentially.
Right.
And so, yeah, but on the flip side, though, if for instance you're buying out 4 houses and you're saying I just want to turn this into a plaza, maybe it doesn't require that many studies, right? Maybe a traffic study, because that plaza all of a sudden is going to see significantly more, foot traffic or car traffic, and so yeah, these might be things. It's really development dependent.
Okay, that makes sense. I saw Denise's comment there. I think I'm up for that. So you let me know when what time works for you.
Every word of your observation of the property is so well. Yeah, absolutely. Listen, that's exactly the reason that we have built this community on school, is essentially being able to look at the opportunities that you guys present and making sure that you guys don't do a bad. I mean, we've stopped a lot of people from some really, really bad purchases because people just see a large parcel of land for a very cheap price and assume that they're getting a deal, right? Which is not always the case. So absolutely, Arrow. Yeah, we can definitely set something up for if you're serious about that opportunity. Definitely, and then kind of get back to you on that. Now, if there is Adam's question, how do we schedule one? Yeah, so Adam, you can schedule a one-on-one. Actually, yeah, Arrow, if you like, you can also schedule that one-on-one on the school directly with me and Hisham to look over that. You will see the link on school platform once you guys are inside. It should be underneath. You'll find it there. It's right there. Beside when you join in, beside the community page, you'll see that. Do you guys manage construction for the property if you get approval? How does this process work? No, we don't do any construction. What we do essentially is that once we have all our entitlement approvals, we exit the project by selling the project to builders. Now, more recently, we have kind of explored the options of potentially partnering up with the builder to essentially just bring our site and then they do the construction, and then doing a JV of that sort. But majority previously, we have just typically exit the projects after our entitlement.
We do have, though, on our new project, I'm going to jump in here, a construction management expert. So we have that option. We're considering that on our current project, but we aren't at that point yet.
We will be in 2 years, roughly.
I'm going to give you guys a plug. I'm going to say I'm partners now with Hisham and Junaid. I brought him an opportunity that was presented to me, and in 15 minutes, Hisham looked at it, the location, Google Maps, knew the municipality, southern and southwestern Ontario is their area of expertise. He looked at it. He gave me 3 reasons why not to buy this project. And I brought another person to them to which those 3 things, in fact, the municipality raised as concerns. And I also brought someone else to him in looking to do something in downtown Kitchener. And he went to great lengths to do a bunch of research, and in an hour had a conversation with the proponent and gave him all of the risks and the issues and what he needed to consider. Hisham and Junaid, or Hisham in particular, it's in his blood. And it's just stuff that it takes years to learn. Hisham knows it inside out and just puts it out there. So if you have projects, this is the place to go. There are a lot of people out there trying to teach development, and they have lost a lot of people a lot of money. Hisham's company and Hisham's history has been very successful, and we are all committed to, helping people become successful, and not just in it for the transaction, which is why they're offering their coaching for free.
Absolutely.
I might have met my match, guys, for how to introduce you, Hisham, you know?
Nathan, you go ahead. Yeah, I always love your introductions.
Oh, well, no, I feel like that was so good. I don't know if I can add much to it. Well, it's easy to kind of sell people like on sincerity. You guys actually deliver, like talk is cheap, so you guys actually get shit done. So yeah.
Appreciate that. Thank
Oh,
you.
appreciate it. Nathan also is given pretty good introductions of us in different meetings. Thank you, Nathan. But guys, if we have no more questions, yeah, I think this is the end. And again, appreciate every single one of you who joined us today. And like I said, if you haven't signed up for our school community, make sure you do so. And same thing for a newsletter. If you haven't signed up, do so. It's just, again, the more exposure you get in this world on developers, the better it's going to be for you guys. Okay. If there's nothing else, guys, thank you and have yourself a wonderful evening.
Thanks, guys.
Take care,
Appreciate it.
guys. Thanks for joining us.
Thank you. Bye.
Take care. Bye for now.